Good morning. Welcome to America First Wealth Management Investment Outlook for Monday, March 17th, 2025. Happy St. Patrick's Day, everyone. I'd like to begin by uh, putting forth our disclaimer. This is a standard disclaimer. We're not offering any investment advice or recommendations to offer to purchase or sell any securities. And our opinions are subject to change as market data and information changes. Reliance upon this information is at the sole discretion of the viewer. Thank you for tuning in. We'd like to begin by giving our market outlook summary first. Market highlights last week. A lot happened. Major stock indices fell for the fourth consecutive week, and the S&P 500 now has closed over 10% below its February 19th high, which puts us officially into a correction zone. This is largely due to escalating trade tensions from President Trump's tariff announcements. Technology stocks in particular experience very high volatility. For example, Tesla alone dropped over 15% on March 10th. Lower than expected inflation numbers on Thursday reduced concerns about a potential stagflation scenario, which stagflation is a recession plus inflation, probably the most difficult economic scenario. So lowering inflation numbers reduce that concern, but a recession, uh, the risk of a recession still remains high. The markets did rebound on Friday, driven by reduced fears of a government shutdown. And in fact, over the weekend, Congress did vote to not to shut down and extended um, spending until September 30th. And also, there was a slight pause in new trade war developments that also assisted with the market rebound. However, on Friday, we also saw the University of Michigan consumer sentiment numbers plunged to 57.9 in March. That's the lowest since November 2022, and it dropped from 64.7 in February and was below forecasts of 63.1. Given persistent trade concerns, potential interest rate changes, and economic slowdown, we do have a cautious investment environment, and many investors are seeking safe haven assets like gold and treasury bonds. Our outlook, near-term outlook, we do expect more volatility and bias towards the downside unless the Fed surprises us with a rate cut at their FOMC meeting on Wednesday. Announcement to be expected at 2 p.m. Eastern Time. A specific event happening this week, Jensen Huang, the CEO of NVIDIA, has given a keynote speech at their GPU Technology Conference, GTC 2025, at 10 a.m. That's Pacific time on Tuesday. And that could trigger a rally in AI and quantum-related stocks. In fact, they're devoting a full day of the event for quantum technology. That's a first for them. Discussions continue between Ukraine and Russia, with the U.S. mediating, and positive developments towards a ceasefire could boost market sentiment. However, over the weekend, U.S. airstrikes on Iran-backed Houthi rebels in Yemen may create upward pressure on oil prices, which we're seeing this Monday morning. Key economic events, Monday, 8:30 a.m., and this just happened. Retail sales month-over-month, they were lower than forecasts of 0.6%. They were actually up just 0.2%. So following the Michigan consumer sentiment numbers on Friday, retail sales being lower than expected are no surprise, but it is a concern that we are at another data point pushing us towards a recession, in my opinion. On Tuesday, 8:30 a.m., we have building permits and housing starts. Wednesday, 2 p.m. will be the key event of the week, be the Fed interest rate decision and their economic projections, followed at 2:30 by a press conference. Thursday, 10 a.m., we have existing home sales, and we're near the end of the earnings season for S&P 500 companies. We just have a handful. On Wednesday, we have General Mills and Super Micro Computer. And on Thursday, we have Darden Restaurants, FactSet, Jabil, FedEx, Lennar, Micron, Nike, and Accenture. Turning to weekly market stats, a lot of red here. As you can see, for the week, all the major indices were down. Equity indices in particular down for the fourth week in a row. Again, as I pointed out, there was a rally on Friday, which, in my opinion, began late Thursday before giving back some of the gains on Thursday. That was following the inflation numbers. But it was a good bounce on Friday. We're not sure if it's going to continue this week. A lot will depend on the Fed announcement on Wednesday. We are in the red zone. We're pretty much down year to date on all the equity indices except for large value. Russell 1000 value is up 54 basis points. IFA, International Stocks, is a standout year to date, up 10.71%. And bonds, as measured by the iShares Core US Bond ETF, up 2.07% year to date. So a lot of investors, it looks like are scrambling for the exits here, given the trade war volatility, uncertainty, and it looks like consumer spending and sentiment are clearly dropping here. All signs triggering towards recession. Hopefully, it'll be a short one. It remains to be seen if this is a normal drop or something more serious. We're of the opinion that this recession will be more of a textbook type of drop. Um, and we do suspect, as we've mentioned before, a lot of this could be engineered to trigger a flight towards safety and lowering interest rates. More about that when we talk about interest rates. The Magnificent Seven, which we've been showing, NVIDIA had a surprise bounce during the week, up almost 8% for the week, but pretty much everything else was down. Amazon being the close to flat, down 65 basis points. Apple led the dive down, down 10.7% for the week. For the year, as you can see, the only name in the Magnificent Seven that's positive is Meta, um, just up 3.87%. Tesla is down 38.1%. Unfortunately, Elon Musk is seeing his net worth being impacted um, this year, and we'll see if that continues or if there's a rebound. As we saw last week, um, Donald Trump did a piece at the White House where he bought a Tesla at the White House. So I don't know if that's going to trigger a bounce in the stock or other events might. Um, over the, I believe it was late Friday, we saw the next launch of SpaceX to rescue the astronauts stranded at the space station. So certainly some positive developments for Tesla and SpaceX. It remains to be seen how the stock reacts given the political turmoil that's going on today. Turning to the sector performance for the week, energy and utilities were the only two sectors that saw positive gains. Everything else was down, led down by consumer discretionary and down 4.36%. And a lot of that's due to Tesla being a large component of the consumer discretionary sector. Surprisingly, consumer staples were also down, second worst, down 4.04% for the week. It's hard to see any trends emerging in terms of clear dominance on a week-to-week basis. We're clearly seeing a lot of volatility, and that's probably causing investors to head towards cash, gold, and treasury bonds. Um, just trying to wait out this volatility here. As we had pointed out early in the year, this scenario would not be a surprise given high valuations and also the fact that there's a lot of treasury refinancing that needs to occur this year. This is the S&P 500 index. We are down below the 200-day moving average. Last week we had said that typically we'll see a bounce at some point. We did see a bounce on Friday. Whether or not that continues, again, depends upon the data this week, especially on Wednesday. 10-day moving average is down as well, and the S&P 500 is below that, which is a bearish, short-term bearish indicator for us. The RSI, however, is oversold, as you can see in the bottom. Um, we're likely to see some sort of a bounce here, which may have begun on Friday and hopefully will continue for this week. US dollar continues to be weak. Uh, we are oversold on the dollar, as you can see on the RSI, also below the 200-day moving average. Gold, I'm sorry, crude oil has been trending downwards, down about 20% since the presidential inauguration. That is a positive in our minds um, for inflation. We overlay the CPI number on this versus oil, and you can see a very strong correlation between oil and CPI. If oil continues to trend down, we're likely to see inflation trend down as well. Bitcoin has been holding at about the 200-day moving average. The trend is still up. We have noted that Bitcoin is a coincident or slightly leading indicator for the S&P 500, which is why we've been tracking it closely. Bitcoin, as measured by the RSI on the bottom, is also in an oversold area. So we're just reading the tea leaves from the charts. This looks like we could see a potential rally in Bitcoin here. Gold remains very, very strong, above the 200-day moving average, trending upwards, getting slightly into the overbought area. We wouldn't be surprised if there was some consolidation, slight pullback in gold, especially as we breached the $3,000 per ounce mark last week briefly and pulled back slightly. Um, it wouldn't be unusual for some profit taking at this level and some consolidation before the next advance. Um, but to us, this looks like a continued upcycle unless there's some significant macroeconomic events or political events that occur. Turning to interest rates, 10-year Treasury yield closed out the week on March 14th at 4.31, just down 1 basis point on the week. We're down 27 basis points year to date. The trend, short-term trend looks slightly up in terms of yields. We had a nice drop. We're seeing a little consolidation here. Given the fact that there's $7 to $9 trillion of Treasury bond refinancing that needs to occur this year, um, a lot of this supply will need to be soaked up by investors to see a continued drop in yield, or we might see continued drop in equity markets, which could lead us to a flight towards safety to treasuries. Turning to yield curve for the week, the blue and the yellow lines, or the last 2 weeks, not much change on a week-to-week basis. However, for the year to date, we do see the yield curve having dropped considerably, although we are still inverted from the short end, from the 0 months out to the 2-year mark. We'd still see an inverted yield curve. Um, Inverted yield curves, as we know, tend to be um, predictors of potential recession, being that it's just at the short end, it could portend that this is a shorter recession versus a longer recession, and we hope that will be the case. Turning to the economic calendar for the week, we just talked about the retail sales this morning. We were below the consensus, just up 0.2% versus forecast of 0.5 and consensus of 0.7. So that's a negative data point this morning. Tomorrow morning, we've got building permits and housing starts. And those will be interesting to see if the slight drop in interest rates we've seen, which has also translated to a slight drop in the 30-year mortgage rates. We'll see if that results in a pickup in building permits and housing starts. And since this is about the start of the spring real estate housing season, it'll be a pretty important data point on Tuesday. Turning to Wednesday, 2 o'clock, as we mentioned, Fed interest rate decision and the FOMC economic projections will be the key event of the week. The consensus is unchanged, 4.5% Fed funds rate. It will be a surprise if the Fed does cut. It will give an indication that they are less concerned about inflation now and more concerned about the economy as economic data points that points towards GDP reduction or recession become a greater concern for the Fed. That, in our opinion, will be quite bullish if that happens. Also following up the Fed rate decision will be Chairman Powell's press conference at 2:30, which we'll be tuning in closely. On Thursday, we've got the existing home sales to continue the real estate information. That's at 10 a.m. Eastern time. And Friday, not much going on. Fed Governor Williams has a speech. S&P 500 earnings for the week. General Mills Wednesday. Again, I'm not going to read all this. I read them before, but I'll just leave these up so everyone can see the consensus estimates versus a year ago. And our take on it is some information on consumer staples with General Mills, technology with Supermicro Computer, some consumer stocks with Darden Restaurants. Also, we've got Carnival on Friday. Those would be some consumer demand-driven stocks. Nike as well. Got FedEx and Lennar. Give us information about transportation, home building. Micron in the technology sector on Thursday, and Accenture as well. And that kind of rounds out the week in terms of our market outlook. Again, to summarize, we are looking at higher volatility here, bias towards the downside, unless we get some good news on Wednesday. And thanks for tuning in. If any of our viewers, investors, or prospective interested parties or would like to talk to us directly, please feel free to contact me. My email is listed here, or Jim Monahan. His email is also shown here. Thank you for tuning in to America First Wealth Management Investment Outlook. I'm Dan Liu. Have a great day and a great week, and happy St. Paddy's Day.